Hi there, I'm Dean Heskin. Thanks for tuning into our podcast, The Secret War on Cash, where we take a hard look at some of the fast changing dynamics that are taking place in not just the domestic economy, but the global economy, which they're kind of more the same at this point. So it's been. I have with me my co host, Chris Agelastos. Chris, how are you today?
I'm doing well, thanks, Dean.
Very nice to hear that. Great to see you as always. Let's get right into our topic of the day. We're going to get back into the BRICS and de-dollarization. De-dollarization has it's that term where countries are looking to get away from the US dollar, looking to strengthen their domestic or local currencies,
Mhm.
all the while, for the most part, denying that they're doing it. Looking at this article or this headline here, the US dollar shares, excuse me, US dollar share in global reserves fall below 58%. So we've been hearing a lot about that, about the dollar, the reserves in dollars dropping, and it's now below
Mhm.
58%. Tell us a little bit, Chris. Number one, what are the reserves used for? What are they? And what is there anything significant about them dropping below that 58%?
Yeah, so other nations for a long time have held a good amount of their reserves for their central banks in US dollars, meaning they don't just have their own currency, right? We all hear about being diversified in the stock market or with our own personal investments. Well, that's what these central banks have done. Instead of having everything in their own currency, and especially because they do trade internationally, they've used the US dollar because it really has been a great currency for a long time. But especially since the early 2000s, uh, we've sort of abused the dollar. We've turned on a lot of the printing presses here in the US and devalued the dollar. And so other currencies that are holding, or other countries, I should say, that are holding our currency, they're losing buying power as the dollar falls in value. So they're starting to diversify out. They want to do more trade in their own currencies. And I think some people reading this article um, might, I guess, give it not much weight. They might say, well, okay, over the last 10 years, the dollar reserves have dropped about 7.5% down to this 58% level. It's about a percent a year. But it has been picking up. So it's building a little bit of steam and moving a little bit faster. And when you compare it to other big reserves like the euro, that's another large reserve that countries hold. The euro has remained stable over that period of time. So they're not necessarily gaining much ground, but they haven't lost any. And for the U.S. dollar to have lost about a percent a year shows you what kind of trend that we're on long term. So I think that countries are going to completely dump the dollar tomorrow? No, but this is a trend that if we can't reverse it, eventually we will get there. And I think the key for people is really just to figure out how to protect yourself. Again, I'm not saying we live here in the U.S. We need to use dollars to pay our bills, but I think people should also diversify their portfolios a little bit so that they don't bear the full weight of the abuse that the dollar has been taking, and they'll be better protected long term.
Well, and that's a critical point, diversification. For those tuning in, if you haven't contacted Swiss America to do that, learn how to put some of your assets, your retirement savings perhaps, into gold or silver. You can learn how to do that by contacting Swiss America at 1-800-289-2646, or visit us online at www.swissamerica.com. And I'm inserting that here just because it's so critical with what is going on around the world right now, that people learn about gold, people be diversified into gold or silver, as it were, because it is really the one asset that has been it's talked about all over the place, how banks and governments and countries and institutions, as well as individual investors, when times get tough out there where there's uncertainty, you want to run to or cling to something in the tangible market. And so you said that as you talked about the de-dollarization, and maybe this not taking effect as quickly as we might have a concern it would. Look at this next article here, Chris. Six global alliances race to ditch the US dollar. they're racing to ditch the dollar. And here's the thing, like this has been happening. We've been covering it now close to 2 years that BRICS has been growing, building momentum, et cetera. My concern is as you look at these countries who are racing to do this, the dollar, which has been, the reserve currency throughout the world for literally forever, for our entire lifetime. The bottom line is that with these, let's just use these six major, they call them economic blocks that are doing this. Is there reason to be concerned that no one wants to be the last one holding the dollar? Because if it's been said that de-dollarization or what they're doing, if it did take effect, it would cripple, if not collapse, the US dollar. And am I wrong in suggesting or assuming that, if that does in fact happen, if a country, whatever country is still holding dollars, they're going to lose a lot of money. They're going to be very vulnerable. Is that a safe thing to say?
Yeah, absolutely. These countries don't want negative exposure for their own reserves. And so if the dollar is getting sort of beat up, or everybody's kind of piling on right now because it's the popular thing to do, and diversify out of the dollar. Other nations, it's less incentive for them to hold it. If you want somebody to buy your stock, or invest in your country, or invest in your currency, you need to present them a good product, a product that has a lot more benefits than it does negatives. And I think what these other nations are doing is moving away from the dollar so that they can get rid of some of that excess risk that the dollar is carrying right now. And you really can't fault them for doing it. They're also doing it, to strengthen their own economies because they can do international trade. A lot of these groups, obviously we've talked a lot about BRICS, so people may be more familiar with that. But some of these other groups, this ASEAN, the Association of Southeast Asian Nations, it's Indonesia, Laos, Malaysia, Thailand, Singapore, Philippines. They're all in the same neck of the woods, right? So it makes sense for them to sort of have an alliance where they can trade using their currencies, and that's just, again, one more step away from the dollar. Same thing with a lot of the oil Gulf nations like Saudi Arabia, Qatar, the UAE, Kuwait, the African Union. Almost all basically of the African states band together so that they can do cross-border transactions and whatnot. So there's more than one thing here. It's not just that they all want to dump the dollar, but they do want to reduce their reliance on it. They want to strengthen their own currency at the same time, and so this does make sense for them. And also, we talked in one of our recent podcasts about sort of these tariffs and the financial war right now that is sort of embraced the U.S. and especially China, and that's how a lot of these battles are fought. And so we do have a lot of these people kind of piling on to reduce dollar dependence, and that is negative for the dollar. And again, one more reason to be diversified. So it's gonna continue. I don't think it's gonna slow down. At this point, it's only going to pick up steam. Now, if President Trump can really turn things around in this term, I mean, I don't think it's going to happen in the next 2 weeks, but during his second term here, if he can really turn things around and make investing in the dollar in the U.S. more appealing, then maybe we can slow the speed of this train. But I don't know that we can completely stop it, because anything that these other nations view as beneficial to themselves, they're going to continue to do.
Sure, sure. Well, interesting times for sure, Chris. Thank you for that. And as I mentioned earlier, if you haven't contacted Swiss America to learn more about diversification or find out a little bit more about how to do so, please call them at 1-800-289-2646 or visit online, swissamerica.com. Thanks for tuning into this podcast. We look forward to talking to you more in the future. If you're not subscribed, please do so. Other than that, just have a great rest of your day. Thanks so much, Chris. We'll talk to you soon.
Thank you.